Hey, what's up, guys? Crypto Keith here with Crypto Living, and we're going to bring to you today the Senate meeting, the Senate hearing going on in the United States of America, where they're talking about regulation, ICOs, whether they're securities or not, and really this is a big reason why the prices are where they're at, although the stock market is crashing as well. But I think that people are uncertain about this hearing, and it really is very crucial to the future of cryptocurrencies and what will happen, especially in the United States. And we know what happens in the United States tends to happen elsewhere, and a lot of other countries follow suit, and there may be a coordinated national effort to regulate cryptocurrencies. So really, whatever they talk about in this live stream that I'm going to share with you now will kind of ripple throughout the rest of the world. So let's check out in a second here what's going on. Okay, guys, so just give me 2 seconds and we'll get to the live stream. No worries, it's coming right up. Cryptocurrencies, you know, all governments are noticing them, whether they're creating their own cryptocurrencies, and maybe this has something to do with them wanting to create fear, uncertainty about decentralized cryptocurrencies so that we buy into government-controlled centralized cryptocurrencies. Just to give kind of a preface to why this is happening, and so you don't really fall for a lot of these things. As well, we've seen the Securities Exchange Commission freeze many cryptocurrency accounts and you know, basically stealing their money, stealing all this money. So there's definitely incentive for the Securities Exchange Commission to be able to call cryptocurrency securities. They would have a lot more power, influence, control, and ultimately be able to seize billions of dollars worth of funds. So today we're going to see whether they're going to criminalize cryptocurrencies or whether they're more lenient and you know, in on the edge of innovation and want to embrace the future. Although the banking sector, the government, the system, it kind of cryptocurrencies kind of free us from that and take away some of their power. So this might not be the best place to go to for your news about cryptocurrencies, and to this is very one side of the polarity, and I'm sure they won't have a lot of the other side of the polarity, you know, cryptocurrency enthusiasts in this hearing. Although here in Canada, we did bring Andreas Antonopoulos to speak to our Senate about regulation. So we'll have to see if they bring anyone in, or whether it's just everyone who's against cryptocurrency in the current system. So yeah, that's about it, guys. Let's get to the live stream, brought to us by Bloomberg. Hodl gang, hodl gang, hodl gang. You guys better be hodling through all of this. Here we can see an article here. I'll share it with you guys. A testimony. Chairs released ahead of the Senate hearing. And we also have you know, some positives. Basically a speech that was going to be said before the Senate, but we'll talk about that after, because I want this to be mainly just a live stream. It's long enough. It's about an hour long. You can find it on my Twitter. Right here, I retweeted the video here. Bloomberg's one of the only people allowed to put full videos on YouTube.
Daily emerging currencies, 1, and 2 is, again,
or you can go, I threw the link down below to right to the source and watch this here. So this is what we're going to do.
Tracking
Right from the beginning.
all these different daily emerging currencies, one, and two is, again, it goes back to my sort of step back question, is someone looking long term at the systemic effects? You know, where are we going to be? This is eerily reminiscent of the late 90s in derivatives, which were nominally small parts of the market that were esoteric, et cetera, and then, of course, 10 years later, exploded. So why don't you start with Mr. Giancarlo, the chairman, and I'll finish up with you.
Thank you very much. So you're absolutely right. Bitcoin is one of many. However, of the many, there's really a handful that have gotten significant traction, and so that's important though for listeners to know, because so many of these are fraudulent, as you said. We went after one, and just mentioned it because I think it's interesting, called My Big Coin, which became known as My Big Con. By people that were defrauded by it. It was people that really were taking, it was a Ponzi scheme. They were taking consumers' money and use it to buy houses and
Big Connect!
And we went after them hard, and we will continue to do that. In terms of systemic risk, right now this is still a relatively small market just by ratio, but as you say, we have to watch it and watch it carefully.
Mr. Chairman.
Yeah. So, as I mentioned, the SEC doesn't have direct jurisdiction over the pure cryptocurrencies, but we have had to watch it because
Big Connect!
with the markets that we do oversee. And to your question of does 10 make sense or 15 or 20 make sense, you know, I have a hard time getting my head around that, because if it's an efficient medium of exchange, 15 of them fluctuating different places probably doesn't make a lot of sense to me. But you know, that's where I'm at. On systemic, look, I agree with Chairman Giancarlo. But if people are getting ripped off, that presents reputational risks that can have systemic effects.
We can go into a raft of questions: money laundering, evading, et cetera. But just changing gears 1 second, and I'll make a comment and then follow up with a written question. There is some consideration I have heard of the SEC allowing in public offering, initial public offerings, bars to suit, i.e. forced arbitration. I think that would be a very bad idea, and I'll make the argument and write to you.
I'm happy to address the question if you...
Well, we're out of time on that right now, so we'll have to do it in writing.
You can put, we'll talk.
Senator Rounds.
Thank you, Mr. Chairman. Gentlemen, I'm just curious. I go back to where I learned with a pen and pencil to begin with as well, and we did not have a quill at that time, but we did have number 2 lead. And as I get into this and learn more about this thing, it's fascinating to see how quickly things are moving, and yet everything that we talk about seems to translate back into dollars and cents yet. That has not changed until now. And suddenly we're talking about a new type of exchange, and it sounds almost like bartering to me. And it's a bartering which could avoid the determination of a value in dollars and cents, which brings up the question of how do you tax it if you need to? How do you recognize income? But also, in this particular case, I noticed both of you identified that you have additional, or you have existing resources and regulatory oversight capabilities that you are utilizing today. And while I question whether or not there are seams that have to be filled, it would appear that some basics that maybe a lot of us don't quite understand still have to be answered. And I just want to start out, because I think, Mr. Clayton, you started with this discussion with regard to the issue of whether or not you had control over an ICO, and the fact that if they were issuing, in this particular case, Bitcoin, or the opportunity to market it, you had identified it as a stock, or at least a value of something. What is, in this particular case, that thread that you utilize once again, and can you delve into that a little bit more about how your agency responds to the regulatory need in this particular case? What is the specific item that you look at as being an item which is subject to your review? A security in what?
The definition of a security is broad. and it includes. I'm gonna not use the technical terms. There's Supreme Court cases and things like that, but it includes if you are offering me a security or offering me something, a coin, and I give you money, and the purpose of me giving you that money is to profit from your efforts going forward. So if I give you money, and you give me a coin, and you say I'm gonna take the money and I'm going to grow a business, and that's going to increase the value of that coin. And by the way, Chairman Clayton, you can trade it to somebody else. So you may be able to get value for it tomorrow. In fact, you probably will get value for it tomorrow. Buy now so you can get more value for it in a few days. That's a security.
So commodity-wise, if we're looking at trading commodities, you would not have an interest in the subject of investigating or reviewing whether or not the trading of an ag commodity was something. And yet, when we talk about the CFTC, we're talking about a different story where commodities most certainly are an item of interest to you. Is Bitcoin or are these, as currently being traded, are they a commodity or are they a security or are they both?
What's so challenging about Bitcoin is it has characteristics of multiple different things. One of the phrases that's often used is that Bitcoin is a medium of exchange, a store of value, or a means of account. Well, those three things have different connotations to them. If it's a medium of exchange, then it's like a currency-like instrument. And yet, as we've seen, a number of means of exchanges have been closed to Bitcoin. There was recently a Bitcoin conference that stopped accepting Bitcoin for registrants because they couldn't process the payments. So, but yet it's still spoken of as perhaps a means of account. And in that case, it has implications from the Fed and currency. From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go on to the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks, my 30-year-old niece who bought Bitcoin years ago, and she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it. And she's not a fraudster or a manipulator. She's just a kid and believes in it. And, you know, I was fascinated talking to her. And I think she represents a lot of folks that think there's something in this, I want to hold on to it. And so in that regard, from our point of view, it's a commodity. And if there's a derivative on that, we regulate it. The problem is, in the cash market, we don't have regulatory authority, means we can't set the standards. But what we will do, and we are doing, is looking for fraud and manipulation. And we intend to be very aggressive, if nothing else, so that people like my niece can have some security that there's not fraudsters and manipulators out there, and there are far too many of them.
Thank you, Mr. Chairman. Your suggestion earlier that we bring them both back in at a later date after they've had an opportunity to look at the differences would be very appropriate. Thank you, gentlemen. Thank you, Mr. Chairman.
Senator Warren.
Thank you, Mr. Chairman. So, Chairman Clayton, on January 26, Bloomberg published an article entitled SEC Weighs a Big Gift to Companies, Blocking Investor Lawsuits. Now, as you know, class action lawsuits are how investors can hold companies accountable when they defraud people. And the article says the SEC is thinking about letting companies sell shares in initial public offerings while at the same time allowing those companies to prohibit investors from bringing class action lawsuits against them. Wow. I mean, forcing investors to give up class actions when they've been defrauded. The SEC has never allowed corporations to bar investors who get cheated from bringing class action lawsuits. So I just want to get a straight yes or no answer from you on this. Do you support this enormous change in SEC policy?
So I think you know that I can't prejudge an issue that may come before the SEC, but I'd be happy to talk to you about this. And let me get to the bottom line. I can't dictate whether this issue comes before us or not because of the way it has come before the SEC in the past. But I'm not anxious to see a change in this area.
Okay, so I'm reading tea leaves here.
No, you are reading tea leaves. I'm not.
I mean, you run this agency. The change can't happen without your approval. I think it's fair for the.
That's actually not right. If it came up before the agency, I'm only one of 5 votes.
I'm going to guess there are going to be at least 2 votes against that, and that you, at best, will be the deciding vote.
Senator, I don't want to prejudge the issue. If this issue, I want to be practical. If this issue were to come up before the agency, it would take a long time for it to be decided because it would be the subject of a great deal of debate. And like I said, in terms of where we can do better, this is not an area that is on my list for where we can do better.
Okay, so I tell you what, Chairman Clayton, I'm going to let you get away with that because what I'm reading is real skepticism about a rule like this. You know, the SEC's mission is to protect investors, not throw them under the bus. Mm-hmm. And I can't think of anything that would do more harm to investors than saying they have to pre-waive their rights to sue a company in a class action when that company cheats them. So,
like I said, it's not a change that's on.
I hear you. So let me ask you about something else, and that's the fiduciary rule. Mm-hmm. Financial advisors who put the high fees, the commissions, the kickbacks, the prizes they can get for recommending a specific product ahead of the interests of their clients cost hardworking Americans trying to save their retirements about $17 billion every year. And that's why President Obama and the Department of Labor put the fiduciary rule in place to eliminate these conflicts of interest in retirement accounts like 401ks and IRAs. Now, less than a month after you were sworn in as chairman of the SEC, you issued a request for information asking for public comment on rulemaking related to the standards of conduct for investment advisors and broker-dealers. Mm-hmm. Can you state to this committee that any rulemaking you do on this topic will not weaken the existing protections for retirement savers?
I'm making an absolute statement like that?
Yeah, an absolute statement that you are not going to weaken rules for people who are trying to save for their retirement.
From what baseline?
Well, we have a rule from the Department of Labor. Now, you could strengthen the rule, you could pass the same rule, or you could weaken the rule. I want to know that you're not going to weaken the rule. That's all I'm asking you.
Here's what I'm trying to do. Let me tell you what I'm trying to do. The relationship between an investment advisor, broker, dealer, and their client in a very simple area, they have a 401k, they have an annuity, and they have a few stocks, is regulated, throw out the banking regulators, it's regulated by no less than 5 people. And they all have different standards. My main objective is to bring clarity to that without jeopardizing investor protection.
Well, that's how but that's the question I'm asking about whether or not you're jeopardizing the protection that people are trying to save for their retirement. I get that you could bring clarity. Clarity could be do whatever you want. Clarity is what is right now has cost American investors saving for their retirement $17 billion a year.
I think it's a combination of an insufficient standard in some places, which we are looking to increase.
I'm glad to hear that.
A lack of clarity, and also the standard is only as good as the remedy available. And one of the things that I'm also looking at, believe me, spent a lot of time in this space trying to get it right. One of the things we're looking at is what dollars do you actually collect when somebody has done you harm? Because you can have a really strong standard, but if there are no dollars there, that's a problem.
So I agree with you, Mr. Chairman. If you want to strengthen enforcement of this rule or strengthen the rule itself, count me in. But that's what the American people look to the SEC for. Thank you.
I do.
Thank you. Thank you, Mr.
Senator
Chairman.
Perdue.
I want to go change the subject just a little bit back to Bitcoin here, or to cryptocurrencies. You know, we see in IPOs and
I'm just going to pause this, and we're going to do it in a couple parts because of YouTube's new rules. It matters more if people watch your whole video. So I'm going to cut this off, and we'll start in part 2, finishing the rest of this. So stay tuned for that. It'll be coming up in about 2 minutes. Just give me a second to say goodbye to you guys properly. Okay, here we are. I hope you guys thought that was funny, the Bitcoin sign guy I threw in there. I just felt like watching that damn, someone should have went in there, got in there and held up a sign saying buy Bitcoin. Where is he? My Bitcoin sign guy. There he is. So while I was watching this, I had to go find a picture, and you know, this one was already ready to go with the background cut out. So just to throw some funniness in there, because God, is that lady angry? Is she serious or what? Is her job on the line? Guys, when you hear people this angry, you got to understand that their livelihood is at stake because of Bitcoin. And it doesn't matter. It doesn't, because people's jobs are going to be lost, or they're not going to make as much money for new technology that's better, that helps the world. It's not held back because a couple people get angry or they're going to lose their job, right? So, but I don't know her backstory. Maybe we'll look into that for another video. But yeah, guys, we'll stop this, and we'll finish up in part 2, maybe a part 3 and part 4, because this is about an hour long conference, so or hearing. So guys, check back on my channel in 2 minutes, and you should see the second stream.